Assets under management, AUM, is that the total market price of the investments that an individual or entity manages on behalf of clients. Assets under management definitions and formulas vary by company. In the calculation of AUM, some financial institutions include bank deposits, mutual funds, and take advantage their calculations. Others limit it to funds under discretionary management, where the investor assigns authority to the corporate to trade on his behalf. Overall, AUM is merely one aspect utilized in evaluating a corporation or investment. It's also usually considered in conjunction with management performance and management experience. However, investors often consider higher investment inflows and better AUM comparisons as a positive indicator of quality and management experience. Understanding assets under management. Assets under management refers to what proportion money a hedge fund or financial organization is managing for his or her clients. AUM is that the sum of the market price for all of the investments managed by a fund or family of funds, a risk capital firm, brokerage company, or a private registered as an investment advisor or portfolio manager. Used to indicate the dimensions or amount, AUM are often segregated in some ways. It can ask the entire amount of assets managed for all clients, or it can ask the entire assets managed for a selected client. AUM includes the capital the manager can use to form transactions for one or all clients, usually on a discretionary basis. For example, if an investor has $50,000 invested during an open-end fund, those funds become a part of the entire AUM, the pool of funds. The fund manager can purchase and sell shares following the fund's investment objective using all of the invested funds without obtaining any additional special permissions. Within the wealth management industry, some investment managers may have requirement-supported AUM. In other words, an investor may have a minimum amount of private AUM for that investor to be qualified for a particular sort of investment, like a hedge fund. Wealth managers want to make sure the client can withstand adverse markets without taking over large of a financial hit. An investor's individual AUM also can be an element in determining the sort of services received from a financial advisor or brokerage company. In some cases, individual assets under management can also coincide with a person's net worth. Calculating assets under management. Methods of calculating assets under management vary among companies. Assets under management depends on the flow of investor money in and out of a specific fund and as a result, can fluctuate daily. Also, asset performance, capital appreciation, and reinvested dividends will all increase the AUM of a fund. Also, total firm assets under management can increase when new customers and their assets are acquired. Factors causing decreases in AUM include decreases in market price from investment performance losses, fund closures, and a decrease in investor flows. Assets under management are often limited to all or any of the investor capital invested across all of the firm's products, or it can include capital owned by the investment trust executives. In the U.S., the Securities and Exchange Commission, SEC, has AUM requirements for funds and investment firms during which they need to register with the SEC. The SEC is liable for regulating the financial markets to make sure that it functions during a fair and orderly manner. The SEC requirement for registration can range between $25 million to $110 million in AUM, counting on several factors, including the dimensions and size of the firm. 1. Why AUM matters. Firm management will monitor AUM because it relates to investment strategy and investor product flows in determining the strength of the corporate. Investment companies also use assets under management as a marketing tool to draw in new investors. AUM can help investors get a sign of the dimensions of a company's operations relative to its competitors. AUM can also be a crucial consideration for the calculation of fees. Many investment products charge management fees that are a hard and fast percentage of assets under management. Also, many financial advisors and private money managers charge clients a percentage of their total assets under management. Typically, this percentage decreases because the AUM increases. During this way, these financial professionals can attract high wealth investors. Real-life samples of assets under management. When evaluating a selected fund, investors often check out its AUM since it functions as a sign of the dimensions of the fund. Typically, investment products with high AUMs have higher market trading volumes, making them more liquid, meaning investors can purchase and sell the fund with ease.